here's what the 2026 housing market is forecasting to be by the economic professionals. And guess what? Actually, this is probably going to be better for buyers and sellers next year. So we went through all the stats, all of the major data companies that come out with what their forecasts for 2026 are going to be in the housing market. And we're going to do a rundown of exactly what that looks like. We're going to cover three things in this video. One, projections on price increases by 4 of the major data companies. We're going to also go over interest rate predictions. And 3, talk about this term called the Great Housing Reset. When it comes to forecasting the 2026 housing market specifically, everybody's got a little bit of a different opinion on it. I'm going to go through the 3 ones that I trust the most, tell you what they're saying, and kind of give you a rundown of what the average is between all of them. So National Association of Realtors, NAR, their prediction for next year is probably the most optimistic one. They're saying that home sales are going to increase by 14%, right? So transactions, that'll most likely mean we're going to get more inventory, more buyers are going to come out. Also with that, they're saying the price increase is going to be around 4% on home average growth of prices. So that's the most optimistic one coming out from National Association of Realtors. Well, maybe they just get paid to do that, right? And they want it to be optimistic. So there could be that. Fannie Mae, a little bit more conservative, saying that the home sales will increase about 7%, price growth to being around 3 to 5% next year. The third one, which is one I actually sometimes trust the most, and I would say it's also the most conservative, and that actually comes out from Redfin. They have some of the best data, I think. Also on the very conservative side, they always kind of have been in years past. And here's what they're saying. So they're saying this 3% increase in home sales overall and a 1 to 2% increase in price growth. So that's going to normalize this housing market. No, in the last few years, we've had about that 1 to 2% increase. I think it'll pick up a little bit in price growth to that 2 to 3%, which is a very sustainable one, much better than what we had during the pandemic, which was a 10 to 20% increase year over year, which sounds great for sellers when you own a home, but it's a bit of a nightmare. So we're getting into a more stable, healthy price growth for sellers and also for buyers for home affordability. With that being said, what we're kind of going to see next year is more sales and a modest price growth. With that, interest rates are going to be a big factor. They have been for a long time in these past years, obviously going from the pandemic rates of 3% to now getting to 7%. That was a giant shift. It was amazing how that happened and how the housing market still stood strong. Prices didn't plummet when you think they should have. They're starting to ease down. Little by little, the Federal Reserve is having better news when it comes to inflation, which is one of the most important things when it comes to interest rates. So their forecast for interest rates next year between most of these companies are all kind of floating around. We're going to hover around 6%. There's some that are a little bit more optimistic that we might see 5.5. You can even right now buy down your rate with a point or two to get to 5.5 for sure. But we're hovering around that 6%. Might see a little bit lower. I don't think we see 5s at all by the end of next year, but things could change. There is a really important thing that's going to happen with the Federal Reserve and with interest rates together this year is there's going to be a new Fed chairman hired. So let me talk about that for a second. So Jerome Powell has been the Fed chair for the last few years. He's a very hawkish is a word that you'll hear. He's very conservative when it comes to controlling inflation and holding interest rates for longer. You've probably heard that. The new Fed chair, one of the main front runners for it is what they call dovish. He's most likely going to bring interest rates down. So if that comes to fruition, which we might hear by the end of the year, this year or early next year, and he becomes the new Fed chair, he may have a little bit more conversation on, hey, we should reduce interest rates, and that may push interest rates down even farther. So that's a little bit optimistic. It depends on what happens with that. It depends on inflation data, but I think we will see 6%, maybe back into the 5s by the end of the year. That's kind of with the average of what most forecasters are saying. One of the things we're hearing is this new term called the Great Housing Reset. We're going to talk a little bit about what that looks like. And then there's also this silver lining too. This is actually the first year where wage growth is forecasted to be higher than price growth for home appreciation. So we haven't seen this since 2010. So that is this silver lining for buyers and even sellers to go, we're earning more than prices are appreciating, therefore helping unlock affordability. But with this Great Housing Reset, Josh has been a real estate agent for 20 years. I think it's really good to be able to correlate what is next year going to feel like in comparison to 2005 or 2010 or 2012, or 2021, being somebody that's been in all of those markets, which one do you think that this fits closely resembles, just for people to kind of understand that correlation?
I mean, going back, let's start at 2005 at the beginning, kind of when I started. Houses were flying off the market, and all of a sudden we hit this financial crisis and we started running into foreclosures and short sales, and prices just continued to plummet. That's not what we're looking at here. As inventory grew, and then 2012, it kind of started to flip over and change into a little bit of a different market, and some of that inventory started to get eaten up, and the buyer's market kind of shrunk down, and then kind of is what I think is where we're going to hit is probably somewhere in that 2015 mark, where all of a sudden now we're going to see homes are going to sit on the market a little bit longer. We're not going to see the COVID pandemic where, you put a house on, it's gone in a week. Days on market aren't 30 days and under. We're going to probably start to see that 60 to 90 days would be my guess, is kind of where I think this market's heading with the reset. We're going to hit more of a balanced market versus a very strong seller's market where we've been for the last 4 or 5 years since the pandemic. I think it's going to become more of the balance. Homes are going to sit probably that 69 days. There's still going to be multiple offers in certain situations. That first-time home buyer market base is going to continue to be a struggle for first-time home buyers. They're going to have to be prepared for that. But your move-up buyers, and I think we're going to start to see more of those first-time home buyers that had bought are going to sell and start to move up. And I think we're going to start to see that the market become more balanced. Is predictions looking like?
I think it's going to feel a little bit like this. And I think this thing of we haven't been in a normal market for a long time. It's been, since 2018.
10 years.
I mean, right?
Yep.
It's been nearly, almost 10 years until we've had a balanced market or something that's like, this is normal, right? We went from a pandemic where interest rates were bottomed out and prices just skyrocketed. It was wild. And then we hit this roller coaster where interest rates skyrocketed and nobody wanted to buy a house. Inventory was still really low. So we've had this like really weird market of abnormalities over the last, 6 years. But now we're going to get back to what a normal real estate market should feel like
and should be like that. Get that normal 2 to 5% growth. I'd almost say 2 to 4 is more comfortable. That 10 to 15, yes, it sounds great, but look at the strain it's put on buyers and sellers and on the market as a whole. It's better to see this normal growth of that 2 to 4%.
Sustainable growth,
yes.
Healthy growth.
Yes.
I think that's the thing, and I think it's also this. We'll get to see more inventory as well. I think that's really important for people, that we've had just rock bottom levels of inventory for the last 5 years, that now that's finally easing up a little bit. So sellers that are in their house now have choices on a house.
Yep. Some of those golden handcuffs, as we've always said in the past, will start unlock and bring out more existing sales. New construction sales will still be there, but I don't think they're going to be as strong as they have been in the past.
Yeah, because I think inventory is going to be unlocked a little bit from people. So I think it's this idea of correlating this next year to like what in the past is this similar to. And I think it is that 2015 to 2018, 2019 before the pandemic. It's finally going to feel like that in inventory levels. It's finally going to feel like that price growth. It's going to feel like that also in interest rates. People forget that, hey, interest rates used to be at this spot.
5%, floating in that 5%, 4.5% to 5.5%, sometimes hit 6, sometimes hit 4. But yes, I mean, we could stay in there. That would be great.
Yeah. And I think that's the biggest thing you're going to feel is a more normalized market without the headache of what the pandemic was, and also the crash kind of for sales specifically, or transitions for homes for people because they couldn't find anything. It's going to be much more normalized, much more healthy. So I think it's just really understanding that there is that correlation, that it's not 2005 at all. This is not a post 2005 collapse.
Financial crisis. It's
but
a completely,
inventory, that's the biggest thing of 2005, where there's just so much inventory. We haven't had that, right? We're not even close to getting to that sort of inventory at all. So we don't have a good way for prices to absolutely plummet. So for buyers waiting for something like that, that's probably not going to happen.
No, inventory would have to triple.
It would literally have to triple. Foreclosures would have to come out of nowhere. And we're not seeing that. So I think this is going to feel like a more normal market in this next year. We're going to have healthy appreciation on prices. We're going to have a healthy reduction in interest rates. Not a ton. Don't wait too long. It's steadily, hopefully, going to go down. And I think it's going to be a better market for each side this year.
Right. More of a balance for sellers and buyers to be able to make the move they want to and feel like they're still winning.
Yeah. In the coming weeks, we're going to break down what strategies sellers should take based off of the housing 2026 market forecast, and also for buyers, how they should be treating it and what strategies they can take. take, because this market is going to be different than it has been. So your strategy should be different. We'll give you all the details. Subscribe to this channel and we'll tell you all about it.